Paul, this Huawei story, sort of an outlier, very hard for analysts to have predicted this kind of ramp up in escalation in trade tensions. But what does it mean? What does it mean for tech companies, for executives that are trying to do business in China, and then obviously today, share prices?
You know, I think this is unprecedented and incredibly stupid. You know, I'm embarrassed about trade relations when we pull something like this. And of course, in technology, particularly the more cyclical industries within the tech sector like semiconductor and semiconductor capital equipment, even though their stocks have come down to pretty attractive valuations for the long term, I still can't step in when this sort of stuff is going on in the background.
Until what? Until what happens, Paul?
I'd like to see some of these names fall even further to valuations, whether they be price to book, price to sales, price to earnings, akin to what we got in the depths of the financial crisis. And so for some of these stocks, that still is a way to go. And of course, on the geopolitical front, we need to see some sort of stabilization, at least some sort of move by both sides to come to some sort of a peace.
Brent, there's a lot of focus on the supply chain for Huawei, and mind you, we still don't have a lot of details. There's a lot of questions about how all of this is going to play out, the role potentially sanctions are playing in all of this. The U.S. is actually not the only country that's been cracking down on Huawei and devices sold, but could there be potentially winners in all of this, namely some of the American tech names, if you see more demand go in their direction?
Yeah, I cover mainly the internet names, not the supply chain names. So, you know, as Paul said, I think many of our clients are still sitting on the sidelines on tech. They want to wait until the end of the year, assess how companies guide into early next year before they're willing to kind of step in here. We've seen, obviously, a 20% correction in FANG since the peak. The group is still up about 10% year to date, but down 20 from the top. And I think, as Paul highlighted, we think some of these historic multiples could go even lower in the short term. And again, with the year end, beginning of year starting, I think most of our clients are just saying, I'll take a wait and see on tech. Clearly, in terms of valuations, we're seeing some really attractive names like Facebook at 10 times EBITDA, Google at 10 times. So we believe that there are long-term opportunities here right now. But again, tactically short-term, I think there's little to get anyone excited on tech until we get into early next year.
Brent, you say a lot of your clients are on the sidelines. It would seem if they're on the sidelines, they got there pretty recently, because this was a pretty crowded setup right ahead of this whole downturn. I just wonder how difficult that makes it, the job of saying, okay, now finally these stocks are overdone on the downside, if what we're really seeing is people cashing in some of the few areas of the market where they still do have gains.
Yeah, I wouldn't say everyone's on the sidelines, but we're definitely seeing an exit. We're seeing a rotation to defensive sectors. Names like Coca-Cola, Starbucks, Dunkin' Donuts have held up better than some of these names. So I think we're seeing an overall rotation out. We don't believe that rotation stops until we get into the early part of next year. But again, relative multiples are starting to screen much more attractively. So again, I think the client conversations we have, their belief is they still have some time here to watch this drift a little bit lower.
Hey, Paul, when the trade tensions were still pretty nascent, a lot of the analysts would come on the air and say, beware of hardware, but because of the change in sort of trade flows, software might be immune on a relative basis. But then you have a story like Facebook where, again, it's international regulatory institutions that are putting pressure on a name that has nothing to do with buying chips or part of the semiconductor cycle.
Very good point. There we have a privacy issue, and it's not domestic, it is global. And I think I may disagree with the other contributor here this morning. I do like Facebook. Yes, it does have a relatively low valuation. A valuation this low we haven't seen in some time. However, I don't know what their added expenses to beef up their privacy all over the world. I don't know what their business model is going to be. I have some sense as to what their top line will be. I don't know what their expenses are going to be long term. In the meantime, the street is predicting flat earnings per share next year for Facebook. And man, that stock, if that's the case, could come down a little bit lower. Among the FANGs, I think Google is a buy at 1,000. And even though I haven't said this in some time, I think the valuation pendulum is overcorrected. And if you can get Apple in the 160s, I'd be a buyer. And I've been negative on Apple for some time.